Hi there. So welcome to the live broadcast, and today we'll be discussing a couple of issues here. So if you join the broadcast, you comment below with your questions, and I'll be answering your questions as well as I discuss what I need to discuss with you today. As I mentioned last week, we'll be doing some live broadcast today, and I'll be teaching live here on YouTube, and so you comment below with your questions. I'm going to activate the chat box in a moment, and you comment below with all your questions. So comment below with your questions if you just joined the broadcast, as I prepare to go live and start teaching. Today I'll be talking about a couple of issues. Depending on the questions that will be coming, I may be discussing issues about financial reporting and also about management accounting. So if you're joining the broadcast, comment quickly below with your questions. What do you want me to cover in this broadcast? What you want me to discuss? As you can see, today my setup is different. I'm having my marker and the board here. It means I'm going to be lecturing today. So comments below with all your questions, and I will answer all of them for you. So as you should know, from today we have about 3 weeks to go for the examination itself. 3 weeks. So as I mentioned, if you last week, if you're not somebody who has been studying all this while, then I will recommend that you become serious now, because definitely you have to commit at least 2 hours every single day to help you to prepare well for the examination. So comment below with your questions, what you want me to touch on, what you want me to discuss with you about. All right, so Samuel Kwasin, I see you. Welcome. Hi there. It's good to have you back again. It's a pleasure, Samuel. Any questions, you put them in the comment box. So you comment below with your question. So you comment below with your questions if you join the broadcast, and I'll be discussing, as I mentioned, some issues in financial reporting and also in management accounting. But in between these discussions, I will be answering your questions that you'll be posting in the chat box. So if you have any questions that you want me to answer, you have any questions that you want me to look at, put them in the chat box, and I'm going to be answering all of them today for you as we prepare for our examination. So financial reporting. Financial reporting. Now tell me, if you're writing financial reporting, put it in the comment box. What are the challenging areas that you are having? Maybe an accounting standard you don't understand, put it in the comment box. I will discuss that with you right now. Or maybe there is a topic you don't understand, put it in the comment box. I will discuss that with you. So any challenge that you are having in financial reporting, and then management accounting on the other side as well. Today I'm focusing on these two subjects. I'm focusing on these two subjects, financial reporting, management accounting. Nonetheless, if you have any questions in other in other subjects, you can also put them in the chat box, and I'm going to be answering all of that for you as well. So make sure you hit the like button, share this video with your colleagues, and also subscribe to the channel so that if I go live like this, you'll be the first person to be notified, so we can assist you prepare well for the examination. Okay, so I see a question from Samuel Quason. Please, with respect to PSA, could you talk about the ratios, or it's like the normal ratios we have in accounting? Yes, Samuel, PSA, financial statements, preparation, consolidations, and then financial performance or ratios is just like what you know in financial reporting already, so it's not going to be anything new. The liquidity ratios will be there, the working capital ratios will be there, the profitability ratios will be there, only that this time around there will be different indicators in relation to looking at it, because in the public sector you'll be looking at the total revenue, which includes the taxable revenues and then the non-taxable revenues, and with the capital employed, you'll be dealing with a lot of issues such as the total assets, that is current assets, non-current assets, then the issue about long-term finance. So it's going to be the same ratio issue there. However, beyond the normal ratio as a financial performance indicator also, you'll be having, the examiner may set the question on variance analysis. So where you're going to be having the original budget, the revised budget against the actual results, okay? Then you do a performance appraisal based on that. So if, for instance, the taxable revenues are revised budget is more than the actual revenue, then what are the reasons, okay? So you could suggest various reasons why, or how an entity can or various courses of action that an entity can take in order to be able to increase the revenue or increase its performance. If the revised costs are less than the actual cost, what are the possible reasons for that, and what could be the impact of that on the organization? So yes, the ratios substantially are going to be the same as what you know in financial reporting, only that terminology and wordings are going to be different, okay? Terminologies and wordings are going to be different in relation to that. A typical example of that is in consolidation, okay? You know there are consolidated financial statements now in public sector accounting and finance as well. If you are doing consolidated financial statement in public sector, one of the things that you need to understand is that there are, in financial reporting, you have what we call the parent and the subsidiary. Okay, but in public sector, there is nothing like parent and subsidiary. We have rather the control entity and then the controlling entity. Okay, the control entity and the controlling entity. So it is more like terminologies, more like wordings, but the applications are the same. As I mentioned last week, the IPSAs, most of the IPSAs are the same as the IASs and IFRSs, okay? Just about 6 or 7 of them that are purely public sector, that are not found, that the equivalent are not found in corporate financial reporting. So these are the thoughts I can share with you on the issue in relation to ratios. Now the reason why it appears as if my answering is too much is because of the way you answer the question. I needed to narrow it down and look at all other aspects of the question. I hope I answered you right, so comment below with any other questions that you are having. Then I see another question from Kingsford Munufie. Like, I'm sorry if I don't pronounce your name right, okay? Make sure you forgive me for that. So Kingsford, please, in financial management, can you help me with a currency swap and options standard question? Okay. Now, if you're writing financial management, in ICA, currency swaps and options, these are a bit advanced, so the examiner may not set questions really on how you are supposed, because this is advanced financial management stuff, where you are looking at how you undertake currency swap as a hedging technique, how you use options as hedging techniques. At this level, we don't expect the examiner to bring you serious questions about this. However, it's something I could look out in the course of the week as we focus on financial management. So Kingsford, that is the answer I'll give you. I will look at that for you in the course of the week, okay? I will take a question like that in the course of the week. All right, Samuel, it's a pleasure. It's a pleasure. All right, so if you're joining the broadcast now, comment below with your questions. Today, I'm focusing on financial reporting and management accounting to share some thoughts, to share some ideas on what you've got to do. If I have time, we will practice a couple of questions that has to be practiced in relation to that. I think last week someone asked a question about revaluation of assets. I don't know if that was, I've forgotten the person's name though, but I don't know if the person is watching live today, but if you're live, you make sure you indicate. Now, when we come to financial reporting, among other things, there are issues that you have to focus on. There are core standards that are fundamental to financial reporting. If you are writing financial reporting, above all things, I call some accounting standards core accounting standards. In other words, before you get into the exam hall, because before that Monday you will be walking into the exam to go and write the financial reporting paper, these standards must be at your fingertips. You should know them off head. You should know them just like that, because they are going to be critical and they are going to be playing a lot of role in your ability to be able to understand what it is that it is you are doing in relation to that. So what are these core accounting standards? Number one, we can talk about, henceforth I see your question, I'm going to look at it. IAS 16 is a fundamental accounting standard. IAS 12, income tax. Then we come to IAS 36, impairment. IAS 37, provisions, contingent assets, contingent liability. IAS 38, intangible assets. Then IFRS 15, revenue from contract with customers. IFRS 16, leases, or accounting for leases. That's also a very key accounting standard that we need to understand in relation to that. So IAS 16, IAS 12, IAS 36, IAS 37, IAS 38, IFRS 15, IFRS 16. But then, if you are looking at IAS 16, it comes along with other accounting standards like IAS 20, government grants, IAS 23, borrowing cost, and then IAS 40, investment property, and then IFRS 5, assets held for sale and discontinued operation. So anytime you are looking at IAS 16, the reason is that the examiner can move from anywhere, okay? Fundamentally, IAS 16 is going to be critical. It's going to be critical how we revalue assets, how we treat revaluation of assets, and I'm going to get into that in a moment. Then if you are dealing with this IAS 16, the branches of this is how you deal with IAS 16 or property, plant and equipment when we have government grants. How you deal with an asset if we borrow money to finance the acquisition of the asset or the construction of the asset. This is where we talk about qualifying assets, okay? Qualifying assets are assets that take substantial time for them to be completed and ready for use. So that is going to be critical. Then we come to the IAS 40, investment property. Because when it comes to property, plant and equipment, they can be acquired for owner-occupied, meaning the business is using it for its operation, or they can be acquired for rental, lease purposes, or maybe for capital appreciation. In that case, then we are going to be accounting for it according to IAS 40. But there are times when assets change their usage. In other words, an owner-occupied asset could become an investment property. So if an owner-occupied asset is, we account for it according to IAS 16, is now changing into IAS 40, an investment property, the accounting is going to be different. You must know how you account for it, how you do the change. Then sometimes an asset that is held for leasing purposes or rental purposes or capital appreciation purposes could also change into an owner-occupied asset. So in either case, you should be able to know how the movement will be done, how various gains will be accounted for, how various losses will be accounted for, so that you can be able to be in the position to account for it properly in the financial statement. So when you're dealing with IAS 16, this is going to be critical. These branches of accounting standards will be critical. IFRS 5 has to do with assets held for sale and discontinued operations. So if we have assets held for sale and discontinued operations, how do we account for them? So there are conditions that must be met before an asset can be classified as held for sale or discontinued operation. And that is the sale technique. In other words, management must have an intention to sell the assets. The assets should be made available for sale. The management or the organization should have located a buyer or is looking for a buyer through advertisements. And then E means that it is expected that the sale of the assets will be done within 12 accounting months, okay, or the next accounting period. That is what it means by IFRS 5. It means that when an asset has changed from IAS 16 to IFRS 5, we no more depreciate the assets, and now we will change a non-current asset to become a current asset, and so it becomes an inventory. So if the asset becomes held for sale, then you have to account for it according to IAS 2, that is accounting for inventory, where we say that inventory should be carried at the lower of cost or the net realizable value. So these are some concepts that you need to understand when you are dealing with the issue in relation to IAS 16. All right, so let me pause here in a moment and look at a couple of questions that I have here from Kingsford and then Peter as well. Peter ACN. Okay, so Kingsford is saying, please, can I solve only 3 practical questions in management accounting and pass comfortably? Kingsford, that would be a disastrous decision, so don't make that decision in the exam hall. The reason is this. You might not always be perfect. Do you understand it? Because there could be a variance analysis question, there could be a budgeting question, there could be a short-term decision question, there could be a profit statement question, that is absorption costing, marginal costing, and activity-based question. So if you say you are going to calculate or solve 3 questions and pass comfortably, no, I won't recommend that. It is difficult for you to do that. If you just focus on the fact that you are going to be looking at only 3 questions, then you're not going to pass the exams. Because what is the guarantee that you'll be able to really do the 3 questions well? Okay, what is the guarantee? Because we don't have any guarantee, you rather have to manage your time and try to answer all the 5 questions as much as possible. Okay, try to answer all the 5 questions as much as possible, meaning that you should be working with speed and accuracy. If you're able to work with speed and accuracy, then definitely you can be able to work hard and you can be able to increase the chances of passing the exam. So Kingsford, let's not do operation 3 questions. I think last week I spoke about this as a mindset on why many students fail the exams. They only want to focus on 3 questions or something like that. So Kingsford, it's not going to work. I would rather recommend that you spread your wings and do as much as maybe 4 questions or 4.5 questions, so that if you are losing some marks in all the 4 questions, at least it will end up adding up to give you the 50% that we want in relation to helping you to pass. So that is the answer that I will have for you, Kingsford. Don't focus on 3 questions, focus on answering all the questions as much as possible. That is why you need to discipline yourself, you need to allocate your time. I've also shared this before that in the exam hall, the marks allocation will tell you how many minutes you must allocate for a question. So we did the workings, and I think we saw that 1.8 minutes for each 1 mark. So if a question is allocated with 10 marks, that means you need to spend like 18 minutes on that, or I think so, something like that. So you need to, the concept we used was that you are having 3 hours. 3 hours is 180 minutes over 100. Yes, so I think we got 1.8 minutes for each mark. 1.8 minutes for each mark. So When this guides you, then you'll be able to work hard for what you need to work hard for in the example. Then Peter ACN, you are asking a question. Let me look at it. Concerning strategic case study, if you're just joining the broadcast, comment below with your question, hit the like button, hit the subscription button. I'm going to be doing this every single day for the next 3 weeks till you write the exam. So subscribe to the channel, share the video as well, and let's get as much as people as possible to watch the video. So Peter ACN, let me answer your question for you. Concerning strategic case study, does every business decision, strategies, and choices have to be subjected to the SAF module, irrespective of the module or concept one is using for any circumstances? Yes, please. Peter, that is critical. That is critical because when you are suggesting a strategy for a company, definitely you must tell us it must be suitable to the company. Okay, it must be acceptable by all the major stakeholders of the company, and certainly it must be feasible for that company, because if you are suggesting a strategy for a company and it is not suitable for them, it is not acceptable for them, it may not be feasible, then you are not doing the company any good. So every strategy, everything that you're doing, you have to ask yourself, is it suitable? Is it acceptable? Is it feasible? Irrespective of the module, irrespective of the standard, irrespective of the circumstance. So Peter, that is the answer to your question. So for instance, if you are maybe the company wants to gain competitive advantage in its respective industry, and you are suggesting the Porter's generic module, and under the Porter's generic module, you know, we have the cost leadership, we have the differentiation, we have the differentiation focus, and then we have the focus strategy. Now, you must look at the company and find out which of these four will be best suitable for the company, which of these four will be acceptable by the stakeholders of the company, and which of these four will be feasible, that a company can do in relation to that. So irrespective of the circumstance, irrespective of the strategy you're using, irrespective of the case study you are looking at, you must always look at suitability, acceptability, and feasibility in relation to that, because it has to be related to the company. So that is the answer that I have for you, Peter ACN, concerning strategic case study. Right, so if you're joining the broadcast, comment below with your questions and let me answer your questions for you and help you to be able to achieve your goal. All right, so having done those Q&As, let me come back to what I was talking about. So I was discussing on financial reporting. So as I mentioned, these are core accounting standards, and I mentioned that when you're doing IAS 16, it's a pleasure, Peter, it's a pleasure. When you're doing IAS 16, these other four accounting standards are going to be critical: IFRS 5, IAS 20, IAS 23, and then IAS 40. They are going to be critical. Then IAS 12, income tax. This is a regular customer, it is definitely going to be there. You don't want to get it twisted. So income tax, you got to make sure you understand everything about income tax, because if you are doing cash flow statements, you've got to prepare the income tax account to find out how much tax that was paid by the company. And you must bring your opening balances, you must bring your closing balances, you must bring your charge for the year. Then the difference between this will be the tax that is paid. This is how you prepare the income tax account if you are dealing with the cash flow statement. So you bring your opening balances, you bring your closing balances as a carry down here. So this is going to be balance carry down here, the closing balance. Charge for the year is going to come on the credit side. Then if there is any over or under provision of tax in the trial balance, you're going to bring that one as well here. Then you balance the accounts. The balancing figure is always the tax that is paid. So this is how you prepare your tax accounts if you are dealing with cash flow statements. But if you are dealing with the income statement in other comprehensive income, then definitely the tax account is going to be a bit different, because you're going to be bringing your opening balance, your closing balances, then you're going to be balancing the accounts, and the balancing figure will rather be what will be charged for the year in relation to that. So And then the issue about deferred tax, okay? If you are writing financial reporting, the examiner said per the syllable scheme, your deferred tax, you are not supposed to really know as deep as it is. The grading is 2, meaning that at least you should have a practice, some fair knowledge like that. When you are doing corporate reporting, the grading is 3, meaning you should have a very practical understanding in relation to that. Nonetheless, deferred tax is critical. You must understand how you treat deferred tax as well for the company. Then IAS 36, impairment of assets. Impairment of assets. Asset is said to be impaired when the recoverable amount is, when the carrying amount of the asset is more than what? The recoverable amount. So if your carrying amount or carrying value is greater than the recoverable amount, then we say the asset has suffered impairment. Now when we say carrying amount, we say carrying amount is the higher of the value in use and then fair value less cost to sell. Okay? The higher of the value in use and then fair value less cost to sell. So you should be able to know how to test for impairment of assets. That is going to be critical. That's going to be critical as well in the exam. Now, value in use has to do with the present value of the future cash flows from the continuous usage of the assets. Okay, the present value of the future cash flows from the continuous usage of the assets. That is what we mean by the value in use. Then the fair value less cost to sell is more or less like the net realizable value. That is how much the entity is going to earn if the entity sells the asset. Right, so remember that when you are dealing with IAS 37, it's one of the accounting standards that is related to the IAS 16. So you've got to be on the lookout for in relation to how you deal with that. For instance, if there is some environmental cost that you're going to be paying in the future, or some decommissioning cost that we're going to be paying in the future, we must get the present value of that and capitalize it by debiting property, plant, and equipment, and then crediting provisions. Then subsequently, we must find out and then calculate or determine the issues in relation to the unwinding of it. And then that unwinding, we're always going to be debiting the income statement and we'll credit provisions in relation to that. So these are the things you need to understand about provisions. Then also, about contingent assets, contingent liabilities, it's critical. It's something you need to understand. It's something you need to know how you deal with, how you handle, because it could happen in the exam hall when you're dealing with contingent liabilities, contingent assets. In either case, you should be on the lookout for in relation to how you look at that. Then we come to IFRS 15, another fundamental accounting standard. This is critical, this is fundamental for you. The reason why this is critical or fundamental for you is that revenue, this is actually an accounting standard that is replacing IAS 18, revenue, and then IAS 10, construction contract. So it's a new accounting standard. Last semester, the examiner brought a theory question on IFRS 15. So this semester, he may be willing or wanting to set some calculation questions on IFRS 15. So make sure you understand the 5-step framework for the recognition of revenue under IFRS 15, because when we are dealing with IFRS 15, we are looking at the recognition of revenue and using the 5-step framework. Using the 5-step framework. Now, what are these 5-step framework? Can you remember that? One, we look at the contracts. There has to be identification of contracts, okay? And there are conditions that must be met for us to identify a contract with a customer. Both parties should agree to the contract. Each party must know their rights, role, and responsibility. The contract must have some commercial value or some commercial substance. it should be probable that the entity will be receiving the money. Okay, so that is identification of the contract. That is the first frame step. Second is to determine the transaction value. Third is to identify the performance obligation. Sometimes we do the performance obligation before the transaction value. Performance obligation has to do with what we are going to be doing or what we are going to be transferring to the customer under the contract under discussion, and it is something that we need to look out for, something that we need to discuss in relation to that. The fourth thing is that we allocate the transaction cost to the performance obligation using their standalone prices. And then the fifth one is that we recognize revenue as and when a performance obligation is satisfied. So these are the 5-step framework that are used in the identification of revenue under IFRS 15. Then we come to IFRS 16, another new accounting standard that came into effect this year, and so certainly the examiner may want to set some questions under that. Now, this accounting standard is actually replacing IAS, is it 17? Yes, IAS 17. It's replacing that. Now, IFRS 16 is a new leases, and under this one, the ideas are a bit different from what you knew under IAS 17. For instance, in IAS 17, it was the lessee who classified the lease as a capital lease or an operating lease. But under IFRS 16, it is rather the lessor who classified the lease as an operating lease or a capital lease. Now, we as the lessee company, what we were going to be doing under IFRS 16 is to only recognize what we call right of use of assets and then the lease obligation. So you make sure that it's a standard that you're going to be familiar with, it's a standard that you're going to be looking at as well in relation to that. Then the last one I would want to talk about is IFRS 9, financial instruments. IFRS 9, financial instruments. Now, another core accounting standard you need to understand, financial instruments, many students over the years or for some periods now have been having a couple of challenges with it. I have a lot of videos or a couple of videos on my channel on financial instruments, and I think on most of these standards here, I think with the exception of leases, I don't think we have a video on leases yet, but I'll cross-check to see if we have video on leases in relation to that. But financial instruments is going to be critical. Now, when you're dealing with financial instruments, note that it is two-sided coin. On one side, there is financial assets. On the other side, there is financial liability. So, depending on where you are standing and how you're going to be accounting for it in the book. So, if you are going to be writing financial reporting, fundamentally, you've got to make sure that you know these accounting standards. In addition to these accounting standards, we have IAS 33, earnings per share, okay? That's also a standard that you go, yeah, that is great. That is also there. We have IAS 10, events after the reporting period. IAS 8, accounting estimates, change in accounting, accounting concepts, accounting estimates, change in accounting estimates and error. Then we have IAS 2, inventory, and some other accounting standards that you need to look at, you need to talk about. IAS 19 is also there. Employment benefits, it's also there in relation to that. So these are what I believe as the core accounting standards that every financial reporting student, okay, any student at all preparing for financial reporting, you've got to make sure that you understand these accounting standards. Now, if you're just joining the broadcast, comment below with your questions. Any questions that you are having, you put it in the chat box, and I'm going to be answering all your questions for you as well. So these are the core accounting standards. Now, apart from this core accounting standards, one of the key areas that students always like and always freak out in the exam or mostly is about consolidated financial statements. Okay, it's our consolidated financial statements. So I'm not going to be diving deeper today on consolidation, but I just want to give you some preview on consolidation, and in the course of the week and as we continue with our discussions and with a live broadcast session, I'm going to be breaking down a couple of these things for you as well, so you can understand them better and prepare well for the examination. So these are the core standards. Now, when it comes to consolidated financial statements, now, one of the questions that students ask me as well, even before I go there, is what they should do when they get to the exam hall, and what they are likely or they should be starting with first. This is, when it comes to financial reporting, almost always, in your 15 minutes, you've got to look at the various requirements of the questions. We know definitely standards are going to be there, question 2. We know definitely consolidated financial statement is going to be there, question 1. We know ratios is going to be there, definitely. And then we know also that we're going to have a question on single entity financial statements. And then question 5 is going to be no man's land theory area, where the examiner could come from ethics, conceptual framework, regulatory framework, the International Accounting Standard Board, standard setting procedures and all that. So that's question 5, is a no man's land area, more theoretical thing in relation to that. So in your 15 minutes, you've got to be going through a couple of the things, reading through the requirements. So the first thing I would want to do is you read through the requirements. That could take you about 3 minutes. You get the requirements of all the 5 questions. Then you can now find out what is your muscle, what is your strength. Maybe your strength is that you can interpret the ratios properly. So somebody may start with the ratios. I always advise that about 90% of students who start with consolidation actually fail the examination at the end of the day, because there could be an item, a statement in consolidation, in the consolidated financial statement, that they are not able to treat. So they spend a lot of time on the consolidated financial statement question and ignoring the other questions that they could have solved as fast as possible in order for them to pass. So this is what I would rather recommend. Do not answer consolidated financial statement questions first. Okay? If it is possible, maybe be strong in ratio, be strong in standards, be strong in a single entity, ratio standards, you can go there first, or maybe the theories, you can go there first, because you see, in the exam hall, you must start with what you are strong with, what you can do comfortably, because there is also another psychology, not only to you, but also to the examiner. If you start your first 2 questions, you are just messing up, then we can conclude that the rest of the things you were just messing up. And if you had a challenge with your first question, you had a challenge with your second question, you are not really going to be motivated to even finish all the questions. So my strategy or my technique has always been, before you get to the exam hall, make sure that you are strong in some things that you're going to be starting with. Since you know consolidation is going to always be there, make sure you understand everything about consolidation, all the principles about consolidation. And in case you are wondering, Nhyira, where will I get the principles on consolidation, just check on my channel. I go to the Consolidated Financial Statement playlist or the Group Financial Statement playlist. You're going to be seeing that there in relation to that. Definitely, I have all the principles. Any principle at all you are likely to meet in the exam, or I have discussed that on my channel already. Make sure you go through all those principles and understand it. Then the accounting standards. Make sure you work hard and understand all the accounting standards as much as you can with the core ones that I listed here in that case. Because if you start with the consolidated financial statement, chances are you're going to be finding it difficult, and you may not be able to have the nerve to continue to really do the work the way you need to do the work. So that is my recommendation for you. So when it comes to the consolidated financial statement, as I mentioned, it's an area that students get excited about, but then if they start the question, they realize that it is not actually what they think it is. And many a time, the reason why they realize that it is not actually what it is that sometimes they feel they are confident they can answer the consolidated question or the consolidation question, only to realize that after reading the preamble and after reading the notes, they are not able to answer the question. Now, if you are writing financial reporting, listen to me carefully. Consolidation, single entity financial statements. The way you answer these questions is not about reading all the questions. If you follow my work a lot, if you follow what I do a lot on my channel and also my students on campus and as well as our students online, I don't read the whole question. Because you see, if you are doing consolidation, single entity financial statement, and you try to read the whole question, by the time you finish reading the question, you'll be overwhelmed. You will be overwhelmed and you may not know where to freaking start. So this is what you've got to do. Just read the requirements of the question. Once you read the requirements of the question, go to your workings and then start reading the question. When you read and you think something is doable, do. Because from the preamble, you are likely to get a group structure. You do it. Then maybe you come to note 1. When you read the note 1, do the workings about it. Whatever there is, the transfer that has to be, whatever, entries that have to be made, do it. So instead of reading from the preamble to note 6, before you start work, no. Read the preamble, get the understanding, and work in that order. If you follow my work, that is what I do. That is what I do. So to position yourself very well and to increase your chances of passing the examination, do not read the whole question, especially for consolidated financial statements as well as for single entity financial statement. Just read the requirements of the question. Maybe they said A, calculate goodwill. B, prepare the consolidated statement of profit or loss. Then you know that if I'm doing consolidation, I need some core workings that must be done. Number 1, I need a group structure. So once you read the preamble, you're able to determine the group structure of the company. So please, financial reporting students, when you are solving consolidated financial statements, don't read the whole question. Do not read the whole question. That is very important. That is very important. So break it down like that and read the questions one after the other. The notes, read the notes one after the other. When you read every note, do the workings. When you read every note, do the workings. And then, most especially if you are doing single entity, this is where accounting standards come to be. Because every note actually is an accounting standard. It could be a tax, it could be a prior period adjustment, it could be an IAS 16 question, property, plant and equipment, it could be a leases question, it could be a financial instrument note. So you must understand the accounting standards so that when you read the notes, quickly you know that, okay, this is this accounting standard, this is that accounting standard in relation to that. So for financial reporting students, these are what I think you must look out for. These are some small things that I think you can work at in relation to preparing yourself for the examination. All right. If you are just joining the broadcast, you have any questions, put it in the chat box. Whatever question that you have on whatever subject, on whatever topic, just put it in the chat box and I'm going to be answering all your questions for you in relation to that. Then we come to management accounting. Now, management accounting substantially has been reduced and has been divided into 2. Now we have introduction to management accounting and then management accounting proper in level 2. And the new management accounting contains a couple of contemporary issues in management, which includes issues such as total quality management, issues such as environmental accounting, issues such as and some other issues that were already there, ethics, very critical there. Now, almost every subject in the public, in the ICAG syllabus has something about ethics because ethics is critical, it is fundamental to most of the subjects. So you've got to make sure you understand all of those issues. Then certainly, Profit statements, okay? Management accounting, profit statements, definitely it's something that is going to be there. When we talk about preparation of profit statement, we are talking about activity-based costing, marginal costing, absorption costing. You must know the principles, know the concepts there in relation to that. Then standard costing, variance analysis. It's going to be there certainly, and you must make sure you understand how to prepare the variance as well as prepare the operating profit statements, and also how to work variance backwards. That is when you are giving the variances and you are asked to calculate the standard cost, or when you are giving the standard cost and the variance and you are supposed to calculate the actual cost. So you must know how to do variance from all these angles. The traditional one is we give you the standard and the actual, then you do the variance. But another way the examiner can say the same question is maybe give you the actual, give you the variance and ask you for the standard, or give you the standard, give you the variance and ask you for the actual. And then there is also going to be some advanced variance analysis issues such as the material price planning variance, and then the material purchasing planning purchase variance, and then also the mix variance, the yield variance. You must make sure you understand all of these things. You must make sure you understand all of these things in relation to that. From there, definitely budgeting and budgetary control is going to be there. Now the exam's focus has been, for instance, that the examiner is level 2 management accounting. The examiner is primarily focusing on the preparation of the cash budget, okay, and then master budget. Right, the cash budget and the master budget. The cash budget and the master budget. And nonetheless, functional budgets are critical areas that you need to look at, you need to consider in relation to preparation for your examination. Now, when we say functional budget, we are talking about the sales budget, we are talking about the purchases budget, we are talking about the material budget, we are talking about the labor budget, we are talking about the overheads budget. Now, all of these things will fuse into the cash budget. Then from the cash budget, you can now prepare the master budget, which is the budgeted income statement and the budgeted statement of financial position. So if you are doing budgeting, calculation aspects, these three things are going to be critical, and you must understand all the principles, all the concepts that underline all these things in relation to that. Then also, in addition to these critical calculation areas, definitely you must remember your issues in relation to methods of budgeting or approaches to budgeting, okay? Activity-based budgeting, incremental budgeting, zero-based budgeting, okay? All of those budgeting principles or approaches, you must make sure you understand all of that. So definitely budgeting is going to be a fundamental area in the exam hall that you have to be looking out for. Then, as always, short-term decisions. Definitely the examiner is going to be setting some questions around short-term decisions. So you've got to make sure that you understand how this actually works. So with the short-term decisions now in management accounting, we have break-even analysis, we have make or buy decision, I think we have shutdown decision as well. Can collect all of them up, but definitely then relevant costing analysis is part of short-term decisions. Very critical, you need to understand that. Then in the long-term decision making, this is where we have investment appraisal. We focus on the four methods for appraising investment: the payback period, the net present value, and then the internal rate of return. Sometimes discounted payback can also be mentioned. So these are the only methods that you want to understand when it comes to the long-term decision making. But as I always tell my students, chances are the examiner may not bring a question on investment appraisal. So if you go to the exam hall and there is no question on investment appraisal, don't take it personal. It is part of the job. because it's something critical that it's something critical that the examiner could also do. So if you go to the exam hall and there is no question on investment appraisal, meaning the examiner is going to be spreading his wings. He may bring more questions on short-term decisions or more questions on budgeting and variance analysis in relation to that. Then we come to performance measurement. The examiner has increased the grading rate or the weighing on the syllabus for this area, and so it's an area that you have to also look out for, an area that you have to consider. So management accounting primarily. Now, in addition to looking at all these things, every management accounting student must make sure that you understand these fundamental topics. Okay, these fundamental topics. That is accounting for material, accounting for labor, and then accounting for overheads. Okay, so accounting for material, accounting for labor, and accounting for overheads. These are fundamental accounting standards that you need to understand, that you need to look out for, that you need to consider, because especially for accounting for overheads, because of overhead absorption rates, which is critical for profit statements, critical for budgeting, critical for standard costing and variance analysis in relation to that. So especially accounting for overheads is going to be something that you must make sure you understand very well. These are fundamental topics, fundamental things that every management accounting student must make sure that you understand, you must make sure that you get, you must make sure that you do everything as much as possible to know how to deal with this in the exam hall. So when it comes to management accounting, these are approach. The question, what must I do in the exam hall? Now, when it comes to management accounting, like I said in other subjects as well, you've got to make sure that you have a muscle. And management accounting, this is what is going to happen. Just like financial reporting, you're going to be working with speed and accuracy. What it means is that the time allocation and the way the questions are packed are going to be a bit inconsistent. In other words, if your care is not taken, you are going to be spending longer time on questions that you are not supposed to be spending much time on. So as always, during your 15 minutes, you go through the requirements. You go through the requirements of the question. You find out, okay, what is it that they are asking me to do? If it's a profit statement question, what methods am I using? Is it activity-based costing, absorption costing? Is it marginal costing and absorption costing? What are they asking me to do? Whatever it is that they are asking me to do, that is what I am going to do. That is what you're going to look at. So you read the requirements, then you start reading through the questions. Again, you don't read the whole question and start interpreting and start doing your workings. As you are reading the question, you are underlining keywords, you are writing your notes down, you are planning your work there in relation to that. Because, like I mentioned to Kingsford earlier, do not have an approach that, oh, I'm going to focus on standard costing, budgeting, and then maybe variance investment appraisal. And answer those questions well and go away. The problem of that approach is that you may not answer those questions well. You may not answer those questions well. Now, why could that happen? Because you cannot be certain of everything in the exam hall, okay? There could be a sentence, there could be a language, there could be a phrase that you read in the question that you don't understand. Do as much as you can. You cannot put in as much as effort that you need to put in relation to increasing your chances of passing the examination. So that is what you have to understand. That is what I want you to look at. That is what I want you to focus on in relation to the examination. Because if you do that, if you have this mindset, if you have this ability, spread out your wings and then look at these areas, then you can position yourself and definitely you can position yourself and definitely pass the exam. So that is also what you must understand about management accounting. That's also what you have to understand about management accounting. All right, so these are the things that you got to understand. I've discussed. These are the things that you got to understand. I've discussed already with you the financial reporting, what you have to look at, what you have to focus on, how you need to position yourself. And then also we have discussed the issue about management accounting, what you need to do, how you need to position yourself also for the paper. Now, because this is the first time the exam is being going to be set, or this is the first time for the no syllabus, don't think that the questions are going to be simple, going to be straightforward. They are going to be as technical as you know them to be, which means that you require deeper understanding. Right, so these are what you need to understand about these two subjects primarily, financial reporting and then management accounting. And I'm going to be ending today's broadcast here. For those of you who are interested and want to join our Executive Revision Masterclass, it's starting from next week, and you can call the number that will be left in the chat box. 0548769918 or 05011149296, and so you call us or WhatsApp us on that. So in case you have any questions or you want to know more about our Executive Revision Masterclass, you can call the number 05011149296 or 0548769918, and we will be glad to answer any questions that you are having. So that is what you need to understand in relation to that. All right, so this is what you need to understand in relation to that. So thank you very much for joining today's broadcast. God willing, tomorrow same time, 4 p.m. of 1600 GMT, and we're going to be having another live broadcast today. I think I had questions from Peter, ACN, Kingsford, Monufie, and then Samuel Quasin. These are the people who threw some questions at me from corp strategy case study, public sector accounting and finance, as well as from management accounting. And I discussed the fundamental accounting standards here in financial reporting you need to know about, and also about management accounting. So thank you for joining the broadcast, and I'll see you same time tomorrow as we continue with our journey towards the ICAG November 2019 examination. Thank you, and I'll see you same time tomorrow.